Yeah, well, I mean, it depends on whether you're talking about the individuals or the money following Bitcoin. Because a lot of the bigger, more institutional money that has flowed into the asset class as a whole over the last few years in particular does have that kind of patience. You know, we're talking a lot of venture capital money, which has explicitly a 10-year time horizon. And it's really the retail consumers of it who do not, and who in drawdowns like this tend to get hurt. And I think, you know, if you listen to Saylor's comments, maybe just as of this morning, he's not quite right in the sense that there were some consumers who got in above 20K, and of course we're testing that level now 4 years later.
Do you think that if in fact that marginal retail buyer is gone, what kind of cap does that put on price action over the next year or two?
Look, I think that we're in a long drawdown period here. I think that we've taken the elevator down, and I think that we as an industry are going to have to take the stairs back up and climb out by building real utility. You know, I think that it's a healthy washout in many ways. I think that, you know, one doesn't want to, as a builder, as an investor for the long term, in any of these roles, be in a market where it's being driven by just short-term price action, by speculation, as, let's be honest, the crypto market has been largely over the last couple of years. You don't want to be building in a market where Elon Musk's comments on Twitter are going to drive the price action as dramatically as it's been able to. You want it to be based on real fundamentals of real utility being built by the technology. And I think that's the challenge and also the opportunity for us who are building in the space now.
All right, well, Jill, tell us what that looks like then, real building of utility, that staircase up. What are some of the things we should measure you on in terms of actually building it?
Yeah, absolutely. I mean, I think that there's a lot of potential that's been uncovered through this last run, whether it's use cases in the NFT space, whether it's new forms of collaboration, organization in the form of DAOs, whether it is some of the good things that came out of the DeFi run. I think that there's a lot to be explored on that front. And then I think that there are also a lot of use cases that we've yet to see that have long been promised. The payment space is a great example of this, where Bitcoin was initially designed for payments. And we've yet to see real adoption on that front for cross-border payments, for payroll, for B2B payments, things like this that have been long talked about. And I think that those who are building in that direction, those who are also building the infrastructure for these types of applications, I think that those are the ones who are going to do well. That's where VC money is flocking to now. And, you know, I think that those are all the causes to be optimistic, again, for the long term.
Jill, it's Sarah. I have a more macro question related to just the price declines that we've seen in Bitcoin and across the crypto space. What I think people are trying to figure out is, A, whether there's a systemic risk here, and B, just we didn't have Bitcoin the last time we were in a big hiking cycle like this or going into an economic slowdown. And I wonder what the transmission mechanism actually is, how widely owned it is, and whether it's really going to start to impact consumer behavior and consumer spending, that a lot more people did own Bitcoin and are underwater. Is there any way we can quantify that or look at that?
Well, yeah, I mean, one of the beautiful things about this technology is that a lot of this data is widely available on chain, you know, fully transparent. So it is possible to go in and get a sense for these things. And my sense, I haven't looked into the details of those statistics specifically, but my sense of things is that while, yes, I think on the order of, you know, tens of millions of Americans now own some form of digital asset, I don't think that this is where Americans are feeling the pain right now. I think that Americans are feeling the pain at the pump with rising rents, you know, with rising mortgage rates on the home ownership front. Yes, this doesn't help, but this is not going to be a major driver of consumer sentiment. I think that would be, you know, talking about the tail wagging the dog here. I think it's the other way around.
Hey, finally, Jill, after years and years of hearing the message that Bitcoin was a hedge against inflation, now we're hearing more arguments that actually prices could rise if there's relief in interest rates. Is it now a tacit admission that it's a speculative asset that has a lot to do with where rates are?
Yeah, so this is indeed the great irony of this drawdown, right? Is that for years we've all talked about Bitcoin as having a fixed supply, being a hedge against inflation, and of course the way that it's behaving right now is not at all the case. The reality is that Bitcoin has always towed the line between being, on the one hand, yes, this fixed supply asset that maybe someday will be able to replace gold in people's portfolios once it starts being treated as such, and being a very high risk, high beta, technology driven asset. And it's certainly behaving as the latter at the moment. And I think, Saylor made this point in the clip that you played just ahead of this segment, that, you have to look out, I think, at a much longer term time horizon for Bitcoin to shed its status as this high beta, high risk tech asset before it grows into its promise that I think it still does have as an inflation hedge.
Jill, that's good stuff. Definitely held 20K so far this week, even by the slimmest of margins. We'll talk soon. Jill Gunter, thanks.